The Iraqi Dinar today latest news. There are watershed moments in the complex world of global finance, and a single, unheralded announcement from a central institution can shift the entire trajectory of a nation's economy. Today, Iraq has delivered one of those moments. What has just transpired within the Central Bank of Iraq, or the CBI, is now reverberating through the halls of international banking, among currency analysts, and across the community that has been closely tracking the dinar's decades-long journey toward stability and global recognition. The reason for this immense attention is that the CBI has finally secured the comprehensive digital green light, not a speculative report, not a vague internal document, but the formal authorization to commence the full-scale implementation of Iraq's digital financial overhaul. This transition is not just about adopting new technology. It is about fundamentally restructuring how the nation handles its money, manages its security, and positions its national currency for the future. The profound significance of this moment lies not only in the fact that this long-awaited authorization has been granted, but crucially in the swiftness of its arrival and the sweeping scope of its implications. Many observers and economists had conservatively projected that Iraq's financial modernization would continue at a measured pace throughout 2025, perhaps focusing on small-scale pilot programs and lengthy planning stages. However, the CBI decisive move showcases a different reality, one of bold action, strategic acceleration, and a clear national commitment to systemic change. This speed and determination have the potential to rapidly reshape the core mechanisms of Iraq's trade, financial security, and the long-term outlook for the value of its currency. It is a tectonic shift that goes far beyond a simple technological upgrade, impacting the nation's entire economic destiny. To fully grasp the magnitude of this event, it is essential to understand that the digital green light is not merely an installation of new software or the introduction of a modern feature in consumer banking. This approval represents a foundational, structural transition, propelling Iraq away from a historically cash-heavy, predominantly manual financial system, and toward a fully digitized economy that operates in compliance with international financial standards. For too long, the reliance on physical currency and outdated transactional methods has left the country's financial landscape vulnerable, creating opportunities for systemic corruption, facilitating the flow of counterfeit money, slowing legitimate business transactions, and fostering a heavy dependency on the physical U.S. dollar for reserves and major trade. This antiquated, cash-based infrastructure had become a severe bottleneck preventing Iraq from achieving its major economic goals. While the central bank has already been engaged in a phased, incremental modernization process, the full government-level authorization was the critical missing piece required to unlock this next phase of development. Now, with this comprehensive approval secured, the CBI can dramatically expand the rollout of digital payment systems across the country, accelerate the adoption of mobile banking solutions, introduce new e-wallet platforms for citizens, and, most importantly, move forward with the much-discussed and anticipated Digital Dinar initiative. This is the pivotal point that has attracted intense scrutiny from global analysts. They are not simply interested because digital payments are a novel concept, but because this move completes a vital, missing component in the overall, complex strategy for Iraqi currency reform. The suddenness of this announcement is precisely why it caught so many experts off guard. This is not just a technical step, but a massive, strategic leap forward. The general consensus within the financial forecasting community was that Iraq would remain in its meticulous planning phase for at least another year, rigorously testing small-scale models before committing to such a large-scale, nationwide transformation. The CBI action, however, communicates a powerful message of financial readiness and national confidence. This digital authorization allows Iraq to finally shed the slow, restrictive financial methodologies that characterized previous decades. It signals a shift from passively waiting for political or economic stability to materialize, to actively constructing the sophisticated, modern systems that are designed to create and sustain stability. The move from a predominantly cash economy to a fully digitized structure offers immense benefits in terms of financial visibility and control. Once systems are digitized, every financial transaction leaves an immediate, indelible digital record. This empowers the CBI and the government to instantly detect and track illicit financial movements, provides new, powerful tools to restrict currency manipulation by unofficial actors, severely limits black market activity, and eliminates the delays associated with traditional payments. Crucially, it grants the nation real, direct control over the integrity, transparency, and value of its own national currency. Iraq's decisive action has stunned observers because it clearly indicates the central bank's belief that the country is now politically and technically prepared to assert that high level of control, a belief that carries monumental implications for the future standing of the dinar. The fascinating backstory is that Iraq's financial leadership has been quietly, yet systematically, laying the groundwork for this moment over the past few years. Often, when the international spotlight was focused elsewhere, the CBI dedicated considerable effort over the last 2 years to constructing modern financial infrastructure, upgrading core banking software across the sector, ensuring that local banks were connected to recognized global payment platforms, and rigorously enforcing a new, more stringent set of compliance and anti-money laundering rules. The central bank also cultivated partnerships with major international financial and technology firms to modernize essential point-of-sale systems and establish secure digital transaction gateways. Furthermore, a significantly stronger regulatory environment was established to proactively detect and deter financial crimes. Therefore, while the public announcement of the digital green light was a surprise to many, the underlying preparation was meticulously structured. This authorization is, in fact, the final, crucial step in a long and complex sequence of technological and regulatory upgrades that the Iraqi government and the CBI have been coordinating. The reason this news generated such a massive impact is that the approval transitions the CBI from the extensive phase of preparation and testing directly into the phase of execution and widespread implementation. The waiting is officially over, and the country is now in the stage where profound, tangible change is set to occur. When a nation of Iraq's strategic importance flips this switch from mere planning to full-scale doing, the entire global financial community must, and does, pay immediate attention. A key pillar of this financial transformation is the highly anticipated Digital Dinar strategy. Although the CBI has not yet unveiled a complete public rollout plan, internal sources have confirmed that the project mirrors the initial development stages of various central bank digital currency (CBDC) models currently being explored by other nations worldwide. Functionally, a digital dinar would be identical to the traditional physical money issued by the central bank, but its existence would be purely electronic. It is important to emphasize that this is not a cryptocurrency, it is not decentralized, and it is not a private sector token. It is a fully sovereign currency, completely controlled and issued by the nation's central bank and government. This state-controlled digital currency will enable near-instantaneous payments, real-time transaction settlement, full traceability for financial movements, access to much stronger anti-fraud mechanisms, and crucial cross-border interoperability. The implication is clear. No country undertakes the massive effort of launching a digital currency unless it is fully committed to overhauling and modernizing its entire framework for monetary policy. A digital dinar will provide the CBI with unparalleled ease in managing the national money supply, accurately tracking inflationary pressures, instantaneously detecting illegal transaction patterns, and tuning liquidity across the system. It also establishes the foundational transparency necessary to underpin any sweeping future reforms, including significant adjustments to the official exchange rate. This strategic prerequisite is precisely why the financial world is so focused on today's news. The creation of a digital currency is not a casual technical exercise. It is a serious commitment to national financial evolution. Now, to address the immediate question on the minds of most viewers, how does this digital pivot directly align with Iraq's long-standing, publicly declared currency reform objectives? For many years, Iraq has openly discussed the necessity of modernizing its entire monetary structure, which includes consideration of actions like potentially deleting the lower value zeros from the currency, issuing new physical denominations, and most importantly, achieving a much stronger international recognition for the dinar. Crucially, any major currency shift of that magnitude requires a foundationally clean, fully transparent, and completely traceable financial system to be successful. Without robust digital infrastructure in place, any attempt at currency reform carries enormous, almost prohibitive risks. Too much physical cash can disappear into unofficial channels, too much potential corruption can interfere with the process, and too many unknown variables exist. Digital systems effectively neutralize these risks. They provide the government with the essential ability to account for every single dinar in circulation and track every major transaction. By choosing to digitize its economy before executing the final major reform steps, Iraq is meticulously setting itself up for a smooth transition, minimizing the potential for chaos, mismanagement, or system-wide confusion. Therefore, this digital green light is widely viewed by analysts as the essential step before the step, not the currency reform itself, but the absolutely necessary structural foundation that makes any future reform both manageable and politically viable. This foundational move is exactly what caused such surprise globally, as laying the critical foundations is usually the quiet work done behind the scenes before any major public announcements can be safely made. Another profoundly surprising element in this unfolding narrative is the visibly strong and unified political backing that is driving this entire digital transformation effort. Prime Minister Mohammed Shia Al-Sudani has been consistent and forceful in his public messaging, prioritizing comprehensive economic reform, technological modernization, aggressive anti-corruption measures, and the overall strengthening of the national currency. Yet, few expected such swift and total alignment between the executive government and the independent central bank. The fact that this sweeping approval was delivered quickly and without significant political resistance is a powerful indication of unified national leadership. Such political unity is a relative anomaly in Iraq's recent political history, and when that kind of determined national alignment converges with essential financial modernization, major structural changes can occur far more rapidly than any conventional expectation would predict. Al-Sudani has repeatedly articulated a vision for Iraq that includes significantly reducing its historical dependence on the US dollar, systematically eliminating financial irregularities, and pushing the dinar to the forefront of domestic and regional economic activity. This new digital authorization is the perfect, practical tool to realize that mission. It furnishes the government with the necessary leverage to reduce cash-based corruption, enforce accountability and transparency, and move decisively toward genuine economic sovereignty. Therefore, this moment transcends a mere technical upgrade. It represents the forceful momentum of political will translating directly into tangible national action. One of Iraq's most significant and often understated strengths right now is its massive, stable foreign currency reserve. The CBI reserves have grown substantially in recent years, placing them among the highest and most robust in the entire region. These reserves serve as the fundamental financial bedrock, supporting any future currency adjustments or monetary decisions. When a nation systematically strengthens its reserves, it dramatically enhances its internal stability, increases global investor confidence, and critically bolsters its capacity to support any decision regarding the exchange rate. This is where the digital transformation adds another layer of critical meaning. A thoroughly modernized, fully traceable financial system, when combined with these robust foreign currency reserves, creates the optimal environment for the most ambitious future monetary changes. Many astute analysts have concluded that Iraq has been deliberately and quietly preparing for this exact dual foundation, maximizing its reserves first, and simultaneously building digital transparency second. What truly caught observers off guard was not just the digital approval in isolation, but the deliberate and perfectly structured sequence. Strong reserves established first, then systems modernized, then political unity secured, and now the digital rollout actively launched. One of the most immediate and dramatic effects of this systemic shift is projected to be the large-scale reduction of financial corruption and leakage. Iraq has historically been plagued by financial hemorrhaging for decades, as physical cash is easily stolen, smuggled across borders, hidden from authorities, or counterfeited by illicit groups. Black market operations thrive in cash-heavy environments, and for years, the nation struggled to stabilize its exchange rate due to the persistent illegal movement of dollars. Digital systems abruptly disrupt this entire ecosystem. Every single dinar movement becomes traceable. Every major transfer leaves an immediate digital footprint. Large-scale fraud becomes significantly more difficult, and the smuggling of physical dollars becomes nearly an impossible task. Shadow financial markets inevitably weaken in this new transparent environment. Even government payroll fraud, a long-standing and significant problem in Iraq, can be almost entirely eliminated through direct digital payment of salaries. The digital green light is far more than a matter of banking convenience. It is a systemic effort to cleanse a financial structure that has been exploited for generations. What surprised onlookers was the sheer, aggressive commitment Iraq is now showing toward this new era of transparency. It signals profound self-confidence, a strong sense of national readiness, and a clear, determined intention to permanently close the doors to corruption. As Iraq rapidly modernizes its financial infrastructure, it simultaneously makes itself exponentially more appealing to the international financial community. Modern, digital systems are the undisputed foundation of global trade and investment today. Global banking institutions prefer systems that offer digital clarity and secure, auditable payment lines. International investors prefer economies where capital cannot simply vanish into the shadows of the black market. Companies prefer economies that facilitate fast, electronic, and low-risk transactions. Iraq's proactive integration with global financial networks is a powerful step in preparing the stage for total international interoperability. With this crucial digital approval, the dinar is positioned to eventually integrate more seamlessly into major global payment rails. This translates directly into easier, faster trade settlements, a significant boost in foreign investor confidence, and wider international recognition for the currency. This is why global markets have reacted with such intensity to the digital announcement. Iraq is effectively positioning itself as a central, modernized participant in the global economy, rather than a lagging outlier. When a nation of such massive strategic importance with enormous oil reserves becomes this digitally aligned, the economic impact radiates far beyond its borders. For the average Iraqi citizen, this digital revolution has the potential to dramatically transform their everyday lives. Currently, the majority of Iraqis remain heavily reliant on physical cash, a system that is inherently slow, often risky, and severely inconvenient. Many people must spend hours waiting to complete even the most basic bank transactions. Digital systems are the definitive solution to these bottlenecks. Citizens will be able to transfer money instantly, pay all their utility and other bills electronically, safely save their funds, and receive salaries and government benefits without delays. Government aid will be issued directly to secure digital wallets, bypassing intermediaries who have historically siphoned off funds. Small businesses will gain the crucial ability to accept secure digital payments and access legitimate credit and loans much more easily. Young entrepreneurs will finally be able to participate fully in the world of e-commerce in ways that were previously unimaginable. This approval is not just a high-level government upgrade. It is a fundamental shift in lifestyle for tens of millions of people. What has surprised most analysts is the apparent speed with which Iraq seems poised to make this cultural and financial shift. Even older citizens, who are traditionally resistant to digital methods, have already begun adopting mobile banking solutions due to targeted government incentives. Iraq is adapting and evolving at a pace that is far exceeding external expectations. Of course, no transformation of this scale is without its inevitable set of challenges. The transition of an entire country from a cash-centric to a digital system demands massive investment in training, public education campaigns, new physical infrastructure, and, critically, nationwide social acceptance. Banks must complete comprehensive upgrades of their existing legacy systems. Businesses must rapidly adapt their operational models. Citizens must be patiently taught how to use new, secure digital tools. However, Iraq is clearly addressing these prerequisites with determination. Extensive financial literacy and training programs are already deployed. Banks are now compelled to adhere to a new set of digital compliance regulations. Government offices are being equipped with fully updated electronic payment platforms. And the central bank is working in close, coordinated collaboration with financial institutions to ensure a high level of national readiness. The reason this preparedness caught many observers off guard is that it proves Iraq is not simply announcing a digital vision. It is systematically, actively building for it. Many nations announce grand reforms only to see implementation endlessly delayed. Iraq appears to be operating in reverse. Build the foundation first, then announce the completion. In the crucial months ahead, there are several key indicators that market watchers will be scrutinizing. First is the cadence and content of official CBI updates regarding progress on widespread digital payments and modernization achievements. Second is any announcement detailing Iraq's increased integration with global financial systems, particularly steps involving cross-border digital settlement networks. Third are government policy adjustments specifically designed to reduce the use of the US dollar in domestic trade and to incentivize dinar-based transactions. Fourth are the launch of pilot programs, whether small, localized tests of the Digital Dinar or the expansion of major e-wallet rollouts. These tangible signals will demonstrate the momentum and the proximity of Iraq to completing this historic financial transition. Globally, Iraq's ambitious move could have significant wider geopolitical and economic implications. As powerful oil-producing nations modernize their financial infrastructures, they naturally gain increased leverage in complex global trade negotiations. A sovereign digital dinar creates a clear pathway for Iraq to gradually settle an increasing number of its oil contracts in its own national currency, thereby reducing its almost total reliance on the US dollar. While this shift would be gradual and deliberate, even small steps in this direction would fundamentally boost Iraq's economic independence and global influence. This is not about immediately replacing the dollar. It is about establishing a balance of economic power. A modernized, digitally transparent, oil-backed economy supported by massive financial reserves becomes inherently harder for external forces to pressure financially. It gains a profound increase in control over its own economic destiny. And that is what elevates this moment to a truly historic status. Iraq is positioning itself not as a follower in the global economic arena, but as a determined nation ready to forge and shape its own unique financial path. The digital transformation also brings immediate and profound advantages to Iraq's indigenous business sector. Small and medium-sized enterprises, SMEs, will gain access to modern electronic payment tools, enabling them to compete far more effectively both domestically and internationally. Exporters and importers will benefit from significantly faster and more secure trade settlements. Contractors will receive funds through transparent, auditable channels, dramatically reducing payment delays and the potential for graft. Digital systems have the power to elevate entire industrial sectors by facilitating rapid processing, easier, standardized record-keeping, and clearer financial tracking for auditing. This collectively boosts national economic confidence and opens the gates to a higher volume of foreign investment. International investors prize transparency, they demand accountability, and they favor predictable, traceable financial systems. Iraq's new digital framework is designed to provide all three. Education and large-scale public training will continue to be a critically important element of this transition. The CBI is currently rolling out sophisticated financial literacy campaigns aimed at successfully teaching citizens how to securely utilize digital wallets, mobile banking applications, and secure online payment platforms. Educational institutions, from schools to universities, are beginning to incorporate digital finance modules into their curricula. Banks are actively deploying representatives into local communities to clearly explain the mechanisms of the transition. This level of comprehensive preparation reassures both domestic consumers and the international community that Iraq is utterly serious about this digital reform. The surprising depth of these preparations indicates that Iraq is not improvising. It is executing a long-term, carefully coordinated national transition. Another major, long-term impact will be a dramatic enhancement of national financial stability. Digital systems grant the central bank the ability to monitor the entire nation's liquidity in real time. Should inflationary pressures begin to rise, the CBI can respond with greater speed and precision. If the economy faces an unexpected shock, monetary tools can be deployed almost instantly. Traditional banking infrastructures often react too sluggishly to sudden economic shifts. The new digital systems are inherently faster, smarter, and far more operationally efficient. This heightened efficiency gives Iraq significantly greater control over inflation rates, exchange rate fluctuations, and overall financial volatility, which in turn creates the necessary robust conditions for the pursuit of more ambitious monetary strategies, the very strategies that many viewers have been patiently waiting to see unfold. This digital green light may also fundamentally influence Iraq's standing within its own region. Many neighboring countries across the Middle East are also engaged in digitizing their financial sectors. Iraq's rapid and committed modernization allows it to actively participate in new regional financial networks, emerging cross-border payment hubs, and modern digital trade corridors. This participation could significantly increase Iraq's economic influence across the Middle East and strengthen its core financial partnerships. The unexpected element here is that Iraq is now advancing at the same pace, or in some instances, even faster than some of its regional counterparts. This is not the constrained Iraq of a decade ago. This is a country actively stepping into a proactive financial leadership role. One of the most significant long-term outcomes of this digital transformation is the potential for profound economic diversification. For decades, Iraq has been overwhelmingly reliant on revenues derived from oil exports. Digital systems unlock vital opportunities for the development of entirely new industries, including e-commerce, financial technology, a range of modern digital services, and advanced banking products. These new sectors have the potential to employ thousands of young Iraqis and significantly reduce the nation's reliance on the volatile oil sector. This diversification is absolutely critical for the long-term stability and resilience of the economy. Here again, this major shift is arriving much faster than external analysts had predicted, who had often forecasted that true diversification would require another full decade. The digital green light effectively compresses and accelerates that entire timeline. Looking ahead, the next 12 to 18 months will prove to be a decisive period for the nation's financial future. Iraq is highly likely to release further, more detailed information about the Digital Dinar initiative. Banks will be integrating deeper, more sophisticated digital features into their customer offerings. The government will inevitably expand its use of electronic salary payments across all sectors. Foreign investor interest will almost certainly increase as transparency and predictability improve dramatically. Most importantly, the central bank will continue its diligent work of constructing the unshakable financial foundation that is essential to support all future critical monetary decisions. Iraq is now in determined motion. And when a nation of this stature and global importance begins to move with such speed and strategic intent, the entire global financial community must and will pay close attention. To summarize the entirety of this complex news, today's announcement is far more than a routine policy update. It is an undeniable turning point. Iraq has formally and officially entered its digital financial era. The central bank now possesses the comprehensive approval it required. The government is politically aligned and fully unified behind the reform effort. The foundational technology is either ready or being actively deployed, and the populace is visibly adapting to the changes. Whether observers choose to label this as a fundamental reform, a comprehensive financial reset, or a digital shockwave, one central fact remains indisputable. Iraq is no longer financially static. This bold, decisive move caught everyone off guard precisely because it signals that Iraq is not just ready, but actively marching into its next chapter. One that is financially stronger, technologically smarter, profoundly more transparent, and more connected to the rest of the world than at any point in its modern history.